So just this last thing on this quick options trade that I'm making here, it's a small position. I may make it larger depending on how I feel in the next few weeks, few months. We don't have much time, but there is a company called
Russian politics is Russian roulette.
geopolitical investing is Russian
Are you
roulette.
prepared to take risk or not? And I enjoy this life.
This is one of the greatest geopolitical investors of all time. Although many might not see him that way.
Boris Berezovsky made his billion-dollar fortune in the chaos of Yeltsin's Russia. He became one of the richest men in the world as Russia shook off the shackles of communism.
You see, and as we learn in all forms of trading, volatility is not something to be fled from. Volatility is where you're going to make all of your money. Volatility is good for the investors, good for the trader. It's specifically good for the geopolitical investor because the more volatile things are, the higher leverage you have. And Berezovsky and the oligarchs, of course, knew this.
And the state sold off core industries at knockdown prices to
You do
affect
get knocked down prices during those times because of the fear, guys.
aluminium in the Urals, oil in Siberia, steel in the steppes. They all fell into his hands. Crime flourished. Nobody was safe.
It sounds like a lot of the world now.
Berezovsky survived a car bomb, his driver decapitated in front of him. Money first, power next. In 1996, he cemented his rise with a cabinet post under long-term ally President Yeltsin. Rumors ran that it was Berezovsky that was actually running the country.
He's one of the people that took advantage of volatility to come out on top. That's exactly what we're going to do here in the months and years ahead on the Geopolitical Investing Cafe. And yes, everybody, welcome to another edition of the Insomnia Podcast. This is your host, Javier, with the Geopolitical Investing Cafe, with the real Javier Novoa. And it's been a volatile week since Trump's little flirtation with tariffs last week and the ensuing chaos in the markets. We've made some money this week, and I used the money to buy some more equipment, have some money left over, and we made a lot of money off of volatility like the first video. And I just want to give a little shout out, guys, to my main man, GP, Gerald Peters, who's a great trader and investor and teacher of wealth, and he talked about these things this week.
Yes. Hey, folks, welcome to my channel. My name is Gerald Peters, and listen, I believe that anybody, regardless of age, race, sex, or even your current financial situation, anybody can become financially independent in the next 3 to 5 years.
3 to 5 years, of course. We say 2 years. Not rich, guys, but financially independent, free from a job and a boss. He's taken it down a notch from the 7 to 10 years he used to say, because things are actually moving so quickly in the markets. We have a chance of becoming financially independent, I believe, 2 years max, guys, if you really focus and you really buckle down here.
You might get rich in the next 7 to 10.
Rich.
Wait, some of you safe? So think about this.
Shaken the confidence of debt investors across the United States. This should make everyone very, very concerned. And maybe if you're investing in companies,
everyone's concerned, but this is where we shine, guys.
So two U.S. companies, Tricolor Holdings and First Brands Group, collapsed under the weight of their own financial structures.
A lot of people going down now,
Cases,
guys.
this
And we've said this a lot on our channel because these mammoth structures are going the way of the dinosaur, but at least until that time, let's make some money off of.
Has exposed deep flaws in the way credit is being extended in today's financial markets. In other words, these two companies may be a sign that there are many more.
You've been alive on planet Earth as long as you are now, and you don't have that. How fucking long do you think we're going to sit around here waiting for you to save money? One stupid house. You know, I got 17 of them. I ain't that damn smart, man. I just wake up with intention. With intent, I get
Whether
up
you're
with
buying
one
houses or
purpose.
stocks, guys.
You know, with that goal of, I need to make money so that I can invest money, period.
We're trying to get
not
rich.
Not to go somewhere, not to do this, not to do that, not to pay fucking bills. But I have to pay bills in the meantime, but that's not my fucking purpose. My purpose is to get money. Just like Warren Buffett. He wants to get money. Take his money. He wants to push it into insurance companies and businesses that'll pay him money. Why? So that he can take that money and buy shit with. You don't want to use his money. You want to save all of your money. Use their money. Tricolor Holdings was a Texas-based used car dealer and subprime auto lender.
Look at all these people filing bankruptcy, guys.
With poor or no credit.
And again, I'm saying this is good news for the geopolitical investor, for the trader, because this is volatility, guys. This means things are in flux, and we have a chance to actually get in on a breakout, make some good money, like I did this week.
In other words, they were in the highest risk
on GLD.
This whole sector. All right, guys, so check it out. This debt issue, lenders, that could be what they're saying is that's a crack in the bow, so to speak. That's a first sign. That could be the first of many who start to default. But here's the thing. The news's job is to scare the shit out of you. They don't know a fucking
Here's the other thing.
They don't know whose debt's good, whose debt's bad. They don't know which banks are...
The news doesn't know anything. They're just selling fear. And so as traders, we just leverage that fear, guys. This is what Gerald Peters understands very well. That's why he's such a great commentator on the markets.
You got to stay bullish. And remember, the market goes up 70% of the time. And you know what? America is just a badass place. And we're just badass people. And we're just going to overcome it because we always do. And people don't believe that.
We're going to overcome it.
Whatever. They'll be poor and negative somewhere else. We're getting fucking rich. And that requires a positive attitude. And believe me, every time you bet against negativity, you bet against fear, you win. You became a multimillionaire. And everybody else is scared, sitting at home and hiding.
Every time you bet,
pumping, trying to buy houses, trying to buy stocks.
On the side of positivity, you're going to win eventually.
I'm trying to make deals, man. Other people are going to recession. I don't go into recession. Other people do. That's how you guys start thinking. MFG, this shit ain't for you. Don't listen to the news. So you're going to have to ignore the news.
Don't listen to the news, guys.
Anyways.
That's just weeks ago. These two businesses were viewed as strong, stable.
See, nobody knows shit.
Nobody knows.
Reach out to every one of them are bad. Rating agencies don't know shit. You don't know shit. Your dad doesn't know shit. Your friends don't know shit.
So these are large, well-established organizations with great ratings.
Jeffries doesn't know shit.
Tricolor is being investigated for fraud. First Brands is actually on the edge of bankruptcy. The real concern here is, of course, isn't just these two companies.
Oh no, the world's gonna end. It's all gonna crash.
Warning signs there were before they collapsed. How many more companies are out there just like these two?
The world's gonna do it either.
The first company, Tricolor, was known for bluntly risky subprime car loans.
Yep, these are subprime companies. These are risky loans.
Bonds sold to investors, especially when backed by high credit ratings.
It's like my main man GP here, guys. And that's the whole issue, guys, and people like GP and others know this very well. Geopolitical investors know this very well. It's good that everybody thinks that the world's going to collapse, and it's good that bankrupt companies go bankrupt. It's good that subprime companies go bankrupt. Even if you study Austrian economics, you'll know this. because it gives room for what Schumpeter, the economist, called creative destruction. That's always happening, guys. And it's like an eternal chart. Keeps going up, keeps going down, and you just buy the dips. You buy volatility. Of course, the more volatile things are, the more money we make. But I think the point that Gerald Peters is making here, and others, is that you can't allow that negativity to affect you. A lot of people are afraid to buy. Remember, Warren Buffett and others used to say, buy when, I believe Soros was the one who used to say it, buy when there's blood in the streets. Buy when there's great excitement and when there's great panic, guys, and you will get ahead. But if you freeze when there's great panic and you do not leverage those opportunities, you just won't get the leverage. Of course, you can trade and you can make a living, but you won't get the leverage of these big geopolitical bets that this channel's all about. This channel is all about finding that maybe once in every 2 years big bet. And I see the setups coming for it, but it is not yet time for me to unfold that big bet. I see the setup coming for it, and pretty soon I'll do it. I'm going to do it real time, and you're going to be able to see it with me as I trade it, because I know not enough people are going to see it to actually affect the trade, but it's one of those monumental events, and it's going to be where there's either great hope or great fear. It's going to be in the time of that great volatility. But in the meantime, I didn't make, again, a life-changing amount of money this week, but I made good money. I actually bought puts on GLD. GLD is the ETF that matches the price of gold. Gold went up to the record high of above $4,000 last week, and of course it was bound to come down again. It will come down again. It'll go back up. It'll be at $6,000 within the next year. Many people are predicting, and I believe that that could be true. Gold will be at $6,000 an ounce. Peter Schiff has been talking about this for years. But it's the conundrum of, we know it's going to happen one day, but we don't know when it's going to happen. But when we get some sort of piece of information that the whole world does not have and that we can leverage, and we know that we're getting in on a bottom, we can multiply our money with that knowledge. That's what we're trying to do here. And again, I don't have all the answers. I don't have all the ideas. I'm hoping that I can surface some ideas from you, from the material that I get out there, and that you can surface some ideas from me. But I'm just celebrating this week. Again, it was a volatile week. I made some good money. Some friends of mine made some good money. And it's weeks like this that make the year worthwhile. And of course, there's all kinds of crazy news out there, not least of which is the tariff situation, which is still ongoing. So let's just get to a little bit of what's going on in the world here, so that, again, live, real time, I can sort of brainstorm and maybe we'll come up with some good ideas together. That's what this podcast is all about, guys. So, news for the weekend, and what are we expecting, guys, as we stay up in this Insomnia podcast, as we get ready to see the markets in a few hours. And I am not an intraday trader. I am, if anything, an interday and interweek trader, but it's good to observe the markets, at least to find our entry points and to find anything interesting. And I sort of do this trading as a way to generate some extra income while I'm waiting on that massive geopolitical bet that is going to multiply our money here. So market fear eases on bank earnings and U.S.-China optimism. Of course, what sent the market into a tailspin, what sent Bitcoin down, frankly, what sent gold and silver way up, among other things, was this deal with Trump and tariffs in China. And I do not know where it is at this point, but this was as of Monday. Equities up, treasuries down, crude flat, dollar up, gold down. And on Friday is when we made our money. I had bought puts on GLD on Monday that were going to expire in 3 weeks, and I waited until Friday and I got out of my position. I might open another position, but I just wanted to take a quick profit, got out of that position. Trump reaffirms meeting with Xi in 2 weeks. That's something to keep an eye on, guys. Says no when asked if he thinks high tariffs on China will stand. Jobless claims reportedly fell in latest week. Zelensky says needs tomahawks. So the Ukraine situation is very fluid, and it's sort of flipped with Trump ostensibly turning on Russia. But I don't think it's going to last. I think there is going to be a peace with Russia. I think China will have something to do with it. And investing in Russia, when this sort of new detente occurs, I think, will be something that will be very interesting to look into. It may be some way to make money in some investments on that, as I still believe there will be some way to make a good amount of money on the ever-fluid Iran situation. 1 week we're going to attack Iran, another week it's sort of forgotten about. Again, I think there are going to be great investment opportunities there. If nothing else, then rebuilding the infrastructure of Iran and getting the companies that need to grow there and the companies that need to build there some bases. So, Chinese house prices, retail sales are coming up this week, and industrial output, German producer prices, Canadian producer prices, U.S. leading index. So in the week ahead, highlights include the CPI from the U.S., so we're going to see their cooked inflation numbers. And of course, their inflation numbers are ridiculous. Not least of which, guys, they do not include the rise in stock prices in the inflation. They do not include the rise of luxury goods and luxury cars in inflation. I believe that the CPI is not a good indicator of inflation. Inflation is a lot higher than they're saying it is, and you can see it in the price of gold, guys. Peter Schiff and the Austrian economists are absolutely correct in that. And I believe that knowledge also gives us a great edge up. And I think the only people who are beating inflation right now are those who are gaining multiples. And I believe there are some tech companies that stand to do that. And I believe that there are some pharmaceutical companies that stand to do that, not least of which is a company called Omeros. And they're coming out with a new drug, and we'll talk about that in a second here. I think it's a good options play into December. But anyway, this is what's basically going on. Stocks were predominantly bid on Friday, with SPX, NDX, and DJI all posting gains. However, the RUT saw further pressure. The regional banking ETF had pared some of the prior day's losses, or had parred rather, some of the prior day's losses following the woes at Zion and Wall. Again, Zion looks as if it's going under, and this could be a similar situation to the California banking crisis of, I believe, over a year ago. So that's what's going on, and I'm very excited to see how the markets open today in the United States, and I'm excited to see what you think about that. The bizarre bankruptcy at the heart of this week's regional bank meltdown. Gold mania. Everyone's in. What could go wrong? That's exactly why I bought puts on gold, and I may do so again. Anything at an all-time high has, of course, a good chance of going down, and this is not rocket science, as you can see here. Trump refiles $15 billion defamation lawsuit against New York Times after court dismissal. Trump has totally and forever changed the face of politics, not only in the United States, but around the world. And he has changed the acceptable behavior of a public figure or of a person in power. And so I think that will really bring to bear what kind of individuals win, not only in the United States, but in other countries. Of course, if you see in France, Le Pen is up. If you see in Germany, Alternative for Germany is up. And for good or for ill, these sort of populist groups and parties, if not garnering more support, they are definitely garnering more interest. And people may simply vote for them just to have a change. And when people want change, that creates volatility. And again, we'll have to monitor those situations very closely if we want to invest accordingly in those situations. Literally never had a job. Highlights from fiery NYC mayoral debate as Cuomo, Sliwa bash socialists. candidate's record, and that's Mamdani. He is still a favorite to win that election. He may indeed win the election, and we may indeed have a live demonstration of what socialist local politics looks like. And again, there could be some positive aspects, there can be some negative aspects. There will definitely be also opportunities there for the geopolitical investor. Do I know what they are? Not yet necessarily, but we will see. It is a fluid situation. Bubble trouble, the contrarian's curse and opportunity. This is an interesting article because, as you remember, the great, I believe it was John Law, who was very much involved with the South Sea bubble. Oh, they're talking about Isaac Newton here, but there are a lot of these bubbles. Most prominent of them was the tulip mania deal, when tulips just kept increasing in price. They became luxury items. Even one sailor confused a tulip with an onion, and he ate that tulip, and he was sentenced to a very long prison term, only to crash a few years later to basically nothing. Many people's lives and careers were ruined because of that bubble. And the whole aspect of bubbles, I talked to Jim Rogers, who was the protege of George Soros. Of course, George Soros was the master of riding bubbles and getting out. You see, bubbles are not bad. People talk about bubbles. Bubbles are good if you know when to ride them and you know when to get out. And it's always a great principle for the speculator to keep in mind. One of the great rules that was written in the book, the Zurich Principles. And there's a great book on investing and gambling and so on. And one of those principles that the Zurich bankers, who were the greatest bankers and speculators in history, adhered to and kept to was always take profits too soon. Of course, one of the main dictums on Wall Street is cut losses and let your profits run. But in fact, the Swiss bankers would, of course, cut their losses and have stop losses, but they would cut their profits as well, because you never know when that thing's going to crash. And for those of you who study charts, even if you put a stop loss in, you can lose a good portion of money, even more than your stop loss, if a gap occurs. So for example, let's say a stock is $4, and then all of a sudden it can't find another buyer until $2.50. You have lost all of that in an instant, and all of the volume goes there and so forth. That happens a lot. So it's always safe, actually, to set a profit target and take your profits too soon. And that is one of the keys of benefiting from a bubble, because you get out before the bubble pops. And the only way to do that is to take profit too soon. This is authored by Ricardo Cumerlato at Bond Vigilantes. He says, once upon a time, a learned man watched his friends go rich by investing in a company that promised to revolutionize trade. Attracted by the prospect of easy riches, he joined the party, was cautious at first, investing only small amounts. He even sold his shares for a tidy profit when he felt the price could no longer be rationally justified. But as the mania grew and the share price kept increasing, of course he couldn't resist. He bought back in, this time with more money, more conviction, and more confidence. The bubble popped, he lost a fortune. The man was so shaken that he declared he could calculate the motions of the heavenly bodies, but not the madness of people. This is the story of Sir Isaac Newton, one of the most intelligent men in history, about the South Sea bubble in 1720. And why is it so difficult, the author asked, even for one of the smartest people to have ever lived, to resist the lure of financial bubbles? And talks about human nature. The bubble becomes a social phenomenon. This is a great danger that the geopolitical investor must be wary of. Don't follow the crowd. And sometimes, even to my detriment, I have deliberately not taken bets simply because of the fact that many people around me were taking them. I even questioned trading at a time, because I know that many people around me, even people at my day job, are trading and investing now. And I remember there was a famous story of Bernard Baruch, I think. He was a great official in early America. And he saw his shoe shine boy talking about stocks. He immediately sold. And that does hold true for a subset of situations. He went and sold all of his stock. The market is inflated, and there are a lot of fools participating in the stock market. But again, if you stick to your niche, if you stick to what you know, and if you follow these principles, you can make money no matter in what market. Because you'll go according to probabilities, you'll follow the charts, you'll follow the fundamentals, you'll stick to your rule book. And that's the hardest thing about trading, sticking to your rule book and not modifying it. Because here's the thing, guys. And Gerald Peters has his system, the money flow, and many chartists have their system, and nobody's system is correct or foolproof. It's all guesswork. Nobody knows anything. But the very fact of following a system, you get probability on your side, because out of 20 trades, you'll be able to observe, did I gain in the majority of the trades, or did I lose in the majority of the trades? If you gain in the majority of the trades, you can keep following that system. Where people screw up is that they don't follow their system. Say you have to set a stop at 50% of your loss in an options trade. But some people say, well, it's gone down a little bit more, but I really think it's going to go up, so I'm just going to set my stop a little lower, and they end up losing the whole trade. They end up losing more money. Whereas if you just systematically and mechanically trade, this is for trading, by the way, not for necessarily for geopolitical investing proper. But if you just follow your system, you're more probable to make advances, and you can learn more because you know exactly what you've done. So I hope you understood a little bit of that tangent. I think it's very necessary for the trader and for the investor. Betting against a bubble is structurally hard. Even if a fund manager has the courage to go against the grain, the tools to do so are hardly user-friendly. Going long is simple. Buy, hold, and enjoy the ride. Going short, that's a different beast. Shorting equities means borrowing stock, posting margin, and paying dividends to the lender. And again, many value investors like Monish Pabrai and others recommend, they have as a rule to never short. And I don't think selling stock short is a good strategy because the loss is unlimited. I don't think selling a naked put is a good strategy because the loss is unlimited. I don't think selling a naked call is a good strategy because the loss is unlimited. Especially if you're a beginning trader or beginning investor, just buy calls or buy puts or buy a spread. Keep it simple. Don't ever enter into a trade where your loss is unlimited unless you have the faculties and the system in place to cut your loss, because an unlimited loss can turn into ruin, guys. Contrarians need a saintly patient and patient saint. So that's an interesting article. These are all from Zero Hedge. Auto loan delinquencies surged 50% as cracks deepen across U.S. credit markets. Guys, the fact is that new cars are becoming more and more out of reach for Americans, for normal Americans. And that's something that needs to be looked at and addressed. I know many companies or many countries, especially Eastern European countries, have tried to make cars that would be affordable for all citizens, but I've not seen it in the United States. I've not seen it in Texas. Indeed, one of my business ideas is to start a business that would make a super affordable car. I've researched it a little bit, but I haven't gone into all the finesse and all the detail. If you have any advice about it, please let me know. If you know anyone who's doing it or know of an investment opportunity in that, please let me know, because I think there's a great opportunity there. Why can't we make a car that we can sell for $1,000 or $2,000 that is a good, decent car? It may not be aesthetic. It may not have all the amenities. It may have just roll down windows. But why can't we make a decent working car for the working person for $1,000 or $2,000? I think it would be a great business idea. Let me know in the comments if you have any ideas about that, because I would love to start that venture. I think it would be a great investment. It would be doing good, guys. U.S. regulators in climate oversight for big banks. And this is good news. Also, the fact that because of Trump, the quote-unquote international community has delayed the vote on global carbon shipping taxes for over a year. Imagine the disaster that a 10% tax on all shipments. Carbon tax would be for the consumer. It's incredible that we are even entertaining this, but I'm glad that Trump had the stamina to oppose that. Outraged Trump refuses to adhere to global carbon tax on shipping. The world is changing more rapidly than anyone could have imagined a few months ago. This is a very interesting article on volatility. U.S. equity markets extended their losses yesterday as bond yields fell on the back of a decline in U.S. regional bank shares. The S&P index lost 0.6%. The yield on the 10-year U.S. Treasuries dropped more than 5 basis points. The market had the finger pointed at the collapse of the subprime auto lender Tricolor Holdings, which GP was talking about in that video, underscoring the increased sensitivity of the equity market at these elevated levels. Meanwhile, the IMF said it sees significant downside risks to global growth following the renewed tensions between the U.S. and China. Bloomberg writes that Argentinians are dumping the peso as they believe a devaluation is unavoidable. This potentially undermines the rescue package, including a $20 billion swap line put up by U.S. Treasury Secretary Scott Bessent. Things likely got worse when earlier this week President Trump linked Argentinian leader Javier Milei's success in the upcoming midterm elections to U.S. support. French Prime Minister Lecornu can already buy himself an I Am a Survivor t-shirt after surviving 2 confidence votes yesterday. Whether he survives the looming budget debate is another matter, as his fate now rests with MPs willing to back the budget. If the government sticks to its pledge not to invoke Article 49.3, majority must actually do this. They're just talking about this is a dream for the geopolitical investor, because all of these traumatic events, all of these volatile events are converging at once. And I know there are a lot of opportunities in here. I am studying them, I'm reading about them, and I'm looking for that entree that's going to make us multiples on our money. If you have any ideas, please do put them in the comments, guys. So just this last thing on this quick options trade that I'm making here. It's a small position. I may make it larger depending on how I feel in the next few weeks, few months. We don't have much time. But there is a company called Omeros. That is Omeros. And it has an ongoing FDA submissions and interactions. I'm reading here from the AI overview on Google regarding its drug, narsoplimab. I work in the pharmaceutical industry and I'm always looking for some pharmaceutical plays. And again, these plays are very speculative. You have to know exactly how much you're going to lose, and you have to bet accordingly. You have to know exactly how much you're going to lose. You have to have a profit target, and you have to bet accordingly. But if you're willing to make the gamble, and again, this is not investment advice. I'm not an investment advisor, but here's a play on this. They're talking about this drug, narsoplimab, for the treatment of hematopoietic stem cell transplant associated thrombotic microangiopathy. Of hematopoietic stem cell transplant associated with thrombotic microangiopathy. And it's interesting because stem cell replacements, while they've been very controversial, they're coming back, and the new technology is actually confirming this stem cell stuff. And I think there's more opportunity to be had in this area of pharmaceutical research. So it's interesting. The FDA is reviewing a resubmission of the biologics license application, the BLA, after initially rejecting the application in 2021 due to a need for additional information. The company also has other drug candidates like OM5906, blah, blah, blah. So the current status for narsoplimab, and again, this is Omeros. The FDA accepted Omeros' resubmission of the BLA for narsoplimab in May 2025. The application is under review with a decision anticipated in late 2025. Previous rejection, new data. The resubmission includes new analysis from an external control registry, which Omero states shows improved overall survival in patients treated with narsoplimab. And here's another situation, guys, that the stock has doubled. It's actually gone up 88.49% in October, guys. And of course, it's going back down a little bit. I bought options at about here. I wish I would have bought them here. And the stock stands a chance, guys, to multiply. It's up to you. Of course, it's not investment advice. It's up to you when you want to buy the options in the stock. But keep in mind that this is a very volatile process, and it looks like in mid-October, people really started thinking that this drug could be approved, or the process could be approved. So something to look at, guys. This is just a tentative idea in play. And again, do not take investment advice from me. I am not an investment advisor, not an investment professional. Omeros is something to look at, guys. And that is your stock analysis of the week here on Geopolitical Investing Cafe on the Insomnia Podcast.
The Insomnia Podcast. Up all night with Javier. Thanks for watching.